Okay, guys, so today we're looking at XP Factory. They've released their half-year results, and I'm going to do something slightly different in this step. I'm going to be going through the results, some highlights, and I've done some very financial logic type forecasts to see where they could be in a few years' time. So the results, firstly, the context is they used to make losses, sales have gone up and stuff, but last year there was a net loss of nearly 1 million. And before that, it was even worse. They purchased Battle Boom Bars a few years ago. And if you just Google Battle Boom Bars, this is what you see. And it's just amazing. It's just an array of color. It's really cool for events. It's for, young people or corporate events. It's pretty cool. But let's look at the results in the last 6 months. So they bought Battle Boom Bars for 17 million. That's worth remembering. Turnover has grown 130% from 8 million to 18 million, driven by like-for-likes improvements, with 19% improvement at Battle Boom Bars and 20% like-for-like improvement at Escape Hunt, which is the escape rooms. XP Factory has got 27 stores, an increase of 10 stores, and Escape Hunt is 46, an increase of 4 stores. That's significant growth. That's 14 additional sites up to 73, an increase of over 20% of store count in just 6 months. That is fast growth. EBITDA, earnings before interest, tax, depreciation, or amortization, increased by 245% to 3.8 million, whilst franchise stores saw a 30% increase to 1.5 million, which means, they made over 5 million in EBITDA over 6 months. That's from a loss last year of 1 million. That's pretty damn good. Also, they're buying back franchise stores, which we'll talk about in a bit. So, buying back. They've got 3.6 million in cash, which is really strong, healthy financial position. They've been expanding aggressively in the UK and abroad. They've got new Battle Boom locations, I believe, in Woking and Dubai. They've got 2 new sites already under construction, and they've acquired 2 Boom franchises in June. It looks like they're making a decent amount when they go owner operated. But franchising is a good way to also grow. Despite the cost of living crisis, trading in July was significantly ahead of May and June, with strong forecasts for August and increased revenue visibility for H2. So things are getting better. Record pre-bookings for corporate and group sales for H2, enhanced revenue visibility. So it's getting better and better. And you wouldn't expect revenue to be good in summer, to be honest, but it looks like things are going from better to, better and better with this company. So I've done some forecasts here, guys, and we'll start with store forecasts, then I'll look at earnings, then I'll look at PEs and valuations. So if we have 10 a year, they go from 73 stores. In 2030, which is 7 years from now, they have 153. Remember, they built 14 stores in just half a year. So it's unlikely they're going to only grow 10 stores a year. Even 20 is probably too conservative. But at 20 a year, in 7 years, they get to 233. At 30 a year, they get to 300. And at 40, they get to 393. At 50 a year, it goes to 473. And this just shows you the speed of store growth really matters in terms of how many those accumulate in a given time period. Growing 50 a year, they get to 473. Only growing 10 a year, they're at 150. So that's a difference of like more than 3.5x. What about revenue? So the way I worked out revenue, and this is just an estimate. So don't, this is just me doing an estimate based on the most recent figures. They generated 18.8 million in the most recent half. If you divide that by 73 stores, you get to 250 per store, roughly 257,000 per store in a half. So in a year per store, it's about 500k. 515. That's revenue. And I've done some estimates on a 20% margin. Actually, I think their EBITDA is higher than 20%. So these forecasts are pretty conservative. So when we look at this, for 153 stores, we get to a revenue of 78 million. At 20 stores, sorry, growing 20 a year, we get to revenue of 120. At 30 stores a year, you can see it's going up 161 million. So as they keep growing, the revenue goes up. At 50 stores a year, they're having a 243 million in revenue by 2030. These are all on 2030, by the way. All these revenue figures are on the year 2030, so 7 years from now. What about profits? Again, the margin I'm using is 20%. So 20% of 78 million is 15 million. And what about of the 30 stores a year, 161 million, and the profit on that will be 32 million. What about 40 stores a year? Getting up to 40 million. And 50 stores would be, have I missed out 50? Jesus, I've missed out 50. It's probably on the next slide. I've also worked out some PEs here. So PE ratio, price to earnings ratio, I did a video about this about 10 years ago. But a lot of growth companies are valued typically between 10 to 30 price to earnings ratio. So we're just looking at 10 here. If they built 10 stores a year, they've already bought 40, they've already built 14 in the 6 months. So it's unlikely it's only going to be 10. But if it's 10, they could be valued at 157 million if they earn 15 million by 2030. They're only valued at 29 million at the moment, folks. So that's a pretty decent 5x return. What about if they built 30 a year? Now, if they build as many stores as they built in H2 of this year as they did in H1, then they'll build 28. Let's say they just build 20. Then we get to 24 million and a 240 million valuation at a PE of 10. Now remember, it's 29 million now, so it's about, you know, a 9x return if that actually happens. What about if we go to 40 stores? We'll look at this 400. It could be worth 400 million at 40 stores a year at a PE of 10 with an estimated profit of 40 million. These are all estimates, guys. So, and forgive me, well, you know, we're about to, we're not too long in terms of like giving birth and that. So I'm rushing these a little bit. I just wanted to give you an idea of how important store count is. Let's go on to the next one. This is the 50 a year. So look, 50 a year, we get to nearly 500 million in revenue if they get to 48 million in profit, based on the figures I did in the previous slides. What about growth companies are sometimes at PEs of 20. So at 20, if they get to nearly 500 stores in 7 years, we're talking nearly $1 billion valuation, right? That is like a 30x return from now. It's valued at 29 million at the time of recording this video. So yeah, that is the power. What about a 30? That's nearly 1.5 billion. That's 50 stores a year with an estimated profit of nearly 50 million, times it by a price to earnings ratio of 30, you get to 1.46 billion. You know, that is pretty mega. I can't even do the calculations, but at $1 billion, it's the 30x return. So I guess it's like 50x return or something like that. And that is the power of store growth. And if you have profitable business. So I'm going to stop sharing my screen now. Caveat here is I'm not a financial advisor. I don't even do financial and forecasts for a living, but I do forecasts for my job within marketing. And I just use financial logic here, guys. I just estimated the revenue based on the divisible of their current store count and revenue, and just came up with an estimate there. And then the profit margins are estimated to be 20%, even though it looks to me like their profit margins might be higher than 20%. And then I got the estimated numbers right there. So you can see, you can rewind back in the video and you can see how much store count makes a difference. What do I think about Escape? And I think they're a fantastic company. I think they're growing at the kind of speed I would want a growth company to grow at. and they're very profitable. I think they've got a really cool concept. I think it's going to grow in most markets, you know, even in a recession. Yeah, COVID hit it pretty bad. So if there's future lockdowns, you know, that could hit a business like this pretty badly. But it doesn't look like we're going there yet. It doesn't look like there's going to be another pandemic anytime soon. So, you know, if this continues at a trajectory of 20 to 50 stores a year, I wouldn't be surprised if it's valued over 700 million in 7 years' time. You know, I've been wrong before, as we've seen. You know, I was wrong with trading NatWest, but I've been right on other things. I was right on interest rates. I've been right on a property crash. I've been right on stock market crashes in the past. So I'm sometimes right as well. Guys, I really hope you enjoyed this video. Note the caveat and context to this is I'm going to and fro to the hospital where my wife is, and she's about to give birth either today or tomorrow or the next day. I'm just waiting to be picked up to go to the hospital. So I've rushed these forecasts. I did these earlier today, and it's just an estimate. But let me know what you guys think. If you like me doing this kind of thing, this is, by the way, something I've been doing for years. I did forecast when I invested in Domino's Pizza, which 10x'd. I did forecast with Barratt Developments, which I bought for 100 pence and sold at 600 pence, or somewhere abouts thereabouts. And I'm doing it now for Escape Hunt. So I like to do these kinds of forecasts every now and again. It's the first time I've done it for a video on this channel. Let me know what you think. Let me know if you think I could improve this kind of forecast, albeit I did it pretty quickly. I'd still like to hear your feedback. Let me know if you've got any comments. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. I hope you enjoyed the video. Like and subscribe, and I'll see you guys in the next upcoming video. Hopefully by that time I'll be a father. Take care.